The AI Due Diligence Trap. What AI can't tell you about buying a restaurant? Can AI perform restaurant due diligence? AI can help analyze financial statements, leases, contracts, POS reports, and other restaurant records. But it should not replace independent verification or experienced legal, financial, and restaurant brokerage professionals. A buyer gets 2 weeks into due diligence, uploads P&Ls, tax returns, a lease, POS reports, and invoices into an AI tool, and receives a polished summary of revenue trends, expense ratios, lease terms, and questions for the seller. It feels thorough. Then, 3 months after closing, the walk-in compressor fails. Signage the buyer assumed was included gets reassigned. Sales begin slipping, and the buyer cannot explain why. That is the risk of AI due diligence. AI is useful, but it is not a substitute for experience. Some risks are buried in documents. Others are not documented at all. A landlord may have allowed signage for years without including it in the lease. AI cannot flag a right that was never written down. It also cannot inspect equipment, hear a struggling compressor, or identify deferred maintenance. A hands-on POS review may reveal the breakdown between third-party delivery and dine-in revenue. A certified restaurant broker can help determine whether those sales transfer. The opposite problem also happens. A buyer purchasing an $80,000 asset sale asks AI for a due diligence checklist and receives one suited for a major corporate acquisition, including audited financials, aging reports, debt schedules, years of tax returns, litigation reviews, and environmental assessments. Those requests may be appropriate in the right transaction, but due diligence should be proportionate. An $80,000 asset purchase may require greater focus on equipment, lease terms, signage, and conversion. AI knows what can be requested. It does not always understand what should be requested for this deal. AI can analyze what it receives. It cannot independently determine whether the information is complete, accurate, or appropriate. That is the difference between analyzing a restaurant deal and performing due diligence on one. Restaurant due diligence goes beyond the documents. Buying a restaurant involves financial, legal, operational, physical, and human considerations. AI can analyze documents. It cannot replace verification. Financial verification. Buyers may need to compare P&Ls with tax returns, POS reports, merchant statements, sales tax filings, bank deposits, and other records to determine whether sales and expenses reconcile. Owner add-backs should also be reviewed to confirm whether expenses labeled discretionary or personal will truly become earnings for a new owner. AI can identify inconsistencies. Someone still has to determine which records matter and resolve discrepancies. The lease, for many restaurants, the lease can be nearly as important as the business. Renewal options, assignment terms, guarantees, common area charges, and landlord approval requirements can materially affect a deal. AI can summarize a lease and flag provisions for review, but a summary is not legal advice. An AI cannot determine whether the terms make economic sense. Licenses and permits, liquor licenses, health permits, certificates of occupancy, outdoor seating approvals, and other requirements can affect whether a restaurant can continue operating as before. Transferability, timing, and local requirements matter. A license appearing in a document does not guarantee the buyer can step into the seller's position. Equipment condition. A walk-in cooler, hood, AC unit, grease trap, fryer, or dishwasher may look fine on an equipment list while nearing the end of its useful life. AI can read the list. It cannot inspect the equipment. Employees and culture. Some of the greatest value in a restaurant never appears on a balance sheet. Will the general manager stay? What about the chef? Are recipes and systems documented, or does one employee hold years of knowledge? How dependent is the restaurant on the current owner? Those risks are frequently undocumented and require real conversations. Franchise obligations. Franchise purchases add another layer of diligence. A buyer may face franchisor approval, training requirements, transfer fees, renovations, technology upgrades, and a new franchise agreement. A certified restaurant broker familiar with the brand can help explain approval timelines, discovery day, training, and closing requirements. AI can read an agreement. It cannot speak with the franchise development team or manage approvals. vendor relationships, reputation, and seller motivation. Supplier terms, customer loyalty, traffic patterns, competition, seasonality, and the seller's motivation can all affect future performance. Retirement, relocation, burnout, declining performance, or lease issues can all produce the same listing. Restaurant for sale. Much of the context comes from conversations and local market knowledge, where AI genuinely helps. The answer is not to avoid AI. AI can organize documents, compare financial periods, identify unusual expense changes, summarize contracts, develop questions, and flag inconsistencies. Give it P&Ls, and it can identify changes in food cost, labor, occupancy expenses, and profitability. Give it a lease or POS reports, and it can locate terms or numbers that deserve closer review. The key is understanding what AI is doing. It is analyzing. It is not verifying. Where AI breaks down. AI can only analyze what it receives. Incomplete or inaccurate information can still produce a polished, convincing report. It cannot observe a lunch shift, inspect kitchen cleanliness, notice deferred maintenance, or hear refrigeration equipment struggling. It cannot build the relationships required among buyers, sellers, landlords, franchisors, lenders, and advisors. It also does not carry professional accountability. A polished report can make an unverified deal feel verified, but presentation quality does not establish the quality of the underlying information. The real risk is outsourcing judgment. The danger is not that restaurant buyers use AI. They should. The danger is allowing AI to replace judgment about what must be investigated and what matters for a particular transaction. If AI saves hours reviewing documents or uncovers an inconsistency that leads to a better question, that is valuable. If it convinces a buyer to skip equipment inspections, lease review, financial verification, or evaluation of the people running the restaurant, it becomes a liability. The opposite is also true. An excessive checklist for a small asset sale can create unnecessary friction. Due diligence is not about asking for everything. It is about knowing what to ask for, what to verify, and how far to investigate based on the deal's risks and economics. AI can generate questions. Judgment determines which are worth asking. A better way to use AI. When buying a restaurant, use AI as an assistant to your accountant, attorney, and certified restaurant broker, not as a replacement. Let it organize documents, compare financial periods, identify inconsistencies, summarize complicated language, and help develop better questions. Then independently verify what matters: financial performance, lease rights, equipment condition, licenses, employees, franchise obligations when applicable, and the operational realities of the restaurant. An AI-generated due diligence report should be the beginning of the questions, not the end of the investigation. Buying a restaurant is not simply about determining whether the documents make sense. It is about determining whether the business behind those documents is really the business you think you are buying.